sharing your views on the panel at the New York Stock Exchange earlier in the day, and keen to pick your brain and maybe dig a little deeper into some of your thoughts there. And so obviously, as we've alluded to throughout the morning, we've received a lot of interest from across our network in connecting with family offices who are stepping in to leave the gap that's been left by traditional capital providers in the space. Talk to me briefly about Charlestown Capital. Obviously, you guys are a family office. You remain bullish on the oil and gas industry. What's your approach to oil and gas investing? And what are your long-term views on the oil and gas company?
So first and foremost, man, thank you for having me, not only to the panel and to the event, but to spend a few minutes with you. Certainly grateful for that. As you alluded to, Charlestown is a family office. We've been around for about 20 years. As I mentioned on the panel, one of the benefits of deploying, essentially your own capital is you have wide latitude to sort of express your own views. With that comes the consequences of being responsible for those investment decisions. And it allows you to sort of take, very concentrated views. We, about 10 years ago, sort of took a look at the oil and gas business, in large part because that was sort of a period of significant distress. Oil had gone from 120 to 40. There was an emerging sense that there was going to be a lot of distress and, by extension, a lot of opportunity. So when we looked at the industry at the time, two things sort of became, I think, apparent to us. One was that there had been, a decade-long underinvestment in exploration in the business. And, I think we've continued to hear more about that this morning. We essentially need to deal with the global decline rate to replace enough production that's equivalent to the Permian Basin. And so when you have a decade-long dearth of exploration spending, which is largely being replaced by kind of short-cycle assets, the long-term reserve was declining. And we sort of saw that being sort of a durable phenomena. Together, we also noted that there had been a dissipation of the traditional providers of capital to this business. And we really kind of felt like the confluence of those two things was going to provide kind of a generational opportunity to invest not only in the oil and gas business, but in exploration specifically. And so we kicked that effort off in 2016. And, the first 5 years were really tough. I mean, it was, we were putting money to work. And, we can talk a bit about, what that means for us. But we were putting money to work, and, we were not certainly generating the kind of returns that we wanted. And, a conversation like, no one really cared. And when your job and your sort of livelihood is based on creating performance, that was a challenging dynamic. And it's amazing the difference just a few years makes. We persevered and we're thrilled that we did. We are extremely bullish on the oil and gas business. The one thing I will say, and every investor is different and every family office is different. Charlestown is a high return platform. And as well, it's a platform that is focused on sort of being able to deploy capital in a way which gives us maximum flexibility to generate the kind of returns we're looking to generate. And so we have focused on the oil and gas business kind of on the barbells, if you will. One is on the exploration side, where we feel like we have the opportunity to create really extra normal returns. With that comes a significant absorption of risk. And, we are a risk-seeking platform, but certainly, being in the exploration business means absorbing a lot of risk and being able to deal with loss. And so that's very challenging. And so that's kind of been one area, but we really like that business because it has the potential to create the kind of returns we're looking for. And just to unpack that a little bit, for example, when you step into an emerging kind of frontier basin and you acquire a few licenses for a couple of $1 million, and then you spend a couple of $1 million shooting some seismic, and you are then able to farm out that license to a major for 50, 60, $100 million. It's those kinds of return opportunities that really continue to attract us to the exploration business. On the other side, we've been very active in production. So we have been able to buy sort of stable, mature production at very low cash flow multiples. We like that part of the business because it allows us to insert capital and to take it back very quickly, and then to just essentially have a long tail of basis-free cash. The area that family offices, and certainly us in particular, struggle is kind of in the middle, where you're looking for development opportunities or there's development capital required, So on the one hand, it doesn't really create, in the absence of an exit, which we never underwrite to, kind of a big capital outcome, but is yet kind of cash consumptive. And so that's been a challenge for us as a family office looking to generate high returns. But again, that's not sort of universally true of all family offices, I would guess. But for us, the opportunity to participate in those kind of two parts of the business is very attractive. And, the continuing absence of the capital providers historically that would have participated in this, again, plus just the absence of exploration spending makes us very bullish on those two parts of the industry and our opportunities in the near term.
Well, I think as well to build on the theme of replacing declining productivity, and obviously you joined a panel this morning, which was, I guess, provocatively titled Rediscovering E and EMP. I mean, what is the general appetite from investors for investment in new exploration, and where, in your opinion, is new exploration new production coming from today and replacing the shortfall and the declining productivity we're seeing? You obviously focus internationally, but sort of where do you see that growth coming from?
Yeah, and that panel began with the question of what is the importance of the exploration business? As I sort of quipped earlier, at some point there is no P if there hasn't been any E, and so it is absolutely critical not only to the productivity of the business and its longevity within the context of the transition. And I think one important point I'd like to make is, because you're an investor in oil and gas does not mean you don't believe in energy transition, or you don't believe in climate change, or you don't invest and put money behind those ideas. We actually have a multi-period, long-duration investment strategy, which sort of incorporates our sense of that entire arc of change. So we are big investors in the transition, but yet we remain extremely bullish, as I've said, on the oil and gas business. And the question of, is there appetite from investors to invest in the exploration business? Well, again, we sort of, investors is a big category of people, as you know, and within that are various different constituencies that have different requirements. But I will tell you that the best way to attract investors to any investment opportunity is to show them that returns can be realized, that are consistent with their goals, risk and return. And so the sort of emerging and broader recognition of the importance of the oil and gas business to the transition, plus I think a further understanding that the transition is going to take more money and more time to occur, certainly in a way which is not disruptive, just, and to some degree smooth, means that the oil and gas business will have a longer runway, which means that exploration will be more important. So I think you have this sort of confluence of events which says, we understand this business is going to be around. We understand that it needs to be around longer. We understand that in order for it to do that, exploration needs to occur. And then, we've just been fortunate, over the last sort of 12 months to have a couple of situations where I think there has been significant success, which you can point to on the part of early stage investors in exploration. So the example I like to use, in part because, we have exposure to this geography, is offshore Namibia. We were fortunate enough to acquire some indirect interests in some offshore licenses. But part of what attracted us to that was there was a small private company called Impact, which was invested in the projects which Total was operating. They were there early. They got interest in licenses. They did some seismic work. Total came into the block, and today, they own, I think it's something under 10 to 15% of what is likely to be one of the largest oil discoveries in history. And so when people see things like that, and they also see that, more broadly speaking, this industry is going to be around and it can deliver returns, it's that will attract investors back to the space.
Yeah, I mean, there's a huge lot to unpack here, and we don't have enough time today to go through that, unfortunately. But I think maybe just to finish then, the final question I put to you is, in the past you've said to me that, and we've heard this morning how there's been significant underinvestment into the sector for a long time now, but that creates very attractive risk-adjusted returns and opportunities for those who are willing to commit to the space. You also said that where you believe that you're going to be most effective is in exploration. I mean, can you just maybe expand on those comments and just elaborate exactly what you mean?
Sure, yeah. So, in terms of the sort of underinvestment in exploration, or just, frankly, just sort of growth capex in the industry, sort of deep water offshore, sort of truly sort of classic capital E exploration. There's about a 10 plus year sort of hiatus from that as a result of the industry's inability to sort of create on a more integrated basis kind of durable and attractive returns. And I think a credibility issue around return on capital. I think there was just a dialing back from the riskiest parts of the business to the more sort of visible parts of the business. And so that gave rise to, just a reduction in offshore spending. So that was kind of one phenomena. Secondly, I think from an exploration perspective, those barrels just become more critical to kind of the future. And so the comments around the underinvestment in the space really just are emblematic of the fact that the industry kind of was unable to satisfy investor requirements. Our views in terms of, exploration being most effective, I think it's, again, a function of what you are trying to achieve. So what we are trying to achieve at Charlestown is ultimately a high return outcome. And as I said, that creates certain risks. So as we were talking about earlier, we sort of create that in two ways. We can create high returns by either investing early and at a very low entry point in things which can be very big, but take a long time and have a lot of risk. And so that's the sense in which exploration really does fit our bill, because it's very hard to see in the apps. And again, we don't underwrite to exits. We don't underwrite to big commodity price assumptions. When we look at investing in producing assets, even if they have development inventory, you need to be able to generate enough free cash flow to return us our basis after everything that you want to do in a relatively short period of time. And it's very hard to create like a 10x or a 5x kind of return in that environment. So exploration does that. But then, as we were talking about earlier, on the other side, we've got kind of the production side of things, where if we can buy production cheaply enough and get all of our basis back, it, will sort of satisfy us in terms of having a long tail of kind of basis free cash. So exploration is certainly, I think, at the heart of what we're doing, but it's a part of a bigger strategy investing in.
It's really interesting. As I say, there's so much to unpack, and we don't have time to go into it in more detail. But I'll be really interested to follow your progress, and obviously see if what peers of yours and other sort of family offices in the space, whether they follow suit and take a similar approach. There's no doubt there's demand and need for that in the world, sort of in the modern day. So, but Robert, thanks very much for your time. Great to see you.